Good day, you're watching Businessworld Live here on One News. I'm Jes Delos Santos and here are today's top stories. Inflation soars to 6.4% in July, its highest level since October 2018. And here's a respite amid rising prices. The Energy Department says another round of oil price rollback may likely happen next week. The Trade Department is eyeing to sign a free trade agreement with South Korea by November. And Philippine Airlines and Cebu Pacific are closely monitoring the situation in Taiwan as the island's airspace is closed until August 7th. Let's begin our broadcast with inflation accelerating to 6.4% in July. That's from 6.1% in June. Data from the PSA show that the July reading is the highest recorded inflation since October 2018. This also marks the fourth straight month that the CPI exceeded the Bangko Central's target band of 2 to 4%. The July inflation print is also higher than most economists had expected. Year to date, the CPI stands at 4.7%. The main drivers for last month's inflation were elevated food and transport prices, a markup in the indices of housing, electricity, alcoholic beverages, and also contributed to higher inflation. Okay, let's dive deeper into those numbers with Domini Velasquez, Chief Economist over at China Bank. Good day, Domini.
Hello, hi, good morning.
Okay, quite a surprise for you, most especially I think. China Bank was projecting inflation for the month of July at 5.5%. Your thoughts on that 6.4 print for July?
Yes, we thought 5.8, a little bit lower than the median. Largely, our projection was based on the recent rollbacks in domestic pump prices. So that was for the 4 consecutive weeks of July. Gas and diesel declined by around 11 to 13%. But of course, this was more than offset by your increases in, let's say, transport inflation. We expected already the jeepney fare hike of 2 pesos overall for the whole nation, right? And then also sea and air transport increased substantially. I think for flights because there were higher surcharges to oil prices. And then secondly, for secondary round effects, this is becoming more broad, more pronounced in terms of food. For example, in April, we were actually seeing this in our basic food like meat and food because you have higher oil prices, transport costs increase. So for example, if you get some vegetables from Benguet, you bring it to Manila because you use transport. There's some secondary round effects, right? But now we're seeing that even in restaurants, prices have been increasing. And then I guess for this month, which is a little bit not so quantifiable, is that there was a recent depreciation of the peso. So because we have imported inflation, we're now importing more pork, more corn. Of course, our exchange rate affects this. For example, BSP estimates that 1% depreciation of the peso, it actually translates to around 0.05 to 0.1 percentage point increase. So if you look at the depreciation recently, from June to the first half of July, the peso actually depreciated by around 7%. So that feeds into your July numbers also.
Now, what then for you is the outlook here for inflation for the remainder of the year? Do you feel like inflation has already peaked this month, or do you expect it to remain elevated for the rest of the year? Are we even looking at a possible breach of 7%?
Okay, for us, we think it's going to peak around fourth quarter, possibly in October, due to higher prices. As we said, wage hikes implemented in July, transport hikes, of course, they have some effect, but all this impact of these policies are not just immediate. So, for example, when the businesses increase the wage of workers, they will somewhat absorb the costs, for example, just this July, but of course, they'll pass it on to consumers eventually. So we can see some effect of these policies still until end of the year. In terms of the figure, we think it's going to be in the high 6 if oil prices continue to be, I guess, stable. It has actually come down a little bit. Food prices globally has also come down a little bit. So if this one is stable, we think maybe high 6s.
How, given that as well, high sixes at least for the last quarter of the year, but how significant still are upside risks here from offshore?
As I said, maybe I guess maybe volatility in FX, likely an increase in oil prices that actually affects everything since it's really an input for everything, right? But I guess you now see recessionary risks in the US. Just yesterday, the UK is also forecasting recession in the fourth quarter. So there is some leeway for global oil prices to just remain stable.
Okay. Are we seeing as well pressure still largely to be supply side, or are we seeing more emerging demand side pressure here?
I guess for this year, more supply side still. So a lot of the things that are needed are really non-monetary measures, right? By next year, of course, we'll see some demand side. The economy will be fully back on pre-pandemic levels. And then in 2023, you'll have your last tranche of the train law, for example, bringing down the personal income tax of employees. So employees will essentially have more money on their pockets. So this is a little bit demand side, but of course BSP has been very advanced in monetary tightening already, right? So since monetary tightening actually works with a lag, we'll see the effect, and it might indicate any demand side inflation.
Okay, speaking of monetary action here, of course, you have the BSP meeting on August 18. How do you think this recent inflation figure might impact their decision come August 18? Are you leaning more towards a 25 or a 50 beep hike?
Originally, we were thinking 25 basis points, but given the high inflation number, of course, it also depends on the GDP estimate next week. If GDP is up, there might be some pressure to increase policy rates by 50 basis points. Anyway, Governor Orbidalia has also said the economy can actually tolerate these higher increases in interest rate.
But how much more really can we tolerate? How much more room does a BSP have in terms of hiking? And when do you see the central bank hitting the pause button?
Normally, you'd want them to be a little bit higher than inflation. You'd want policy rates to be a little bit higher. So for us, the terminal rate we're seeing is around 4.5%, but that's not until next year. We think the end of the year policy rate will be around 4%. And then another set of increases, maybe smaller increases next year, up to 4.5%.
But again, of course, like what you mentioned earlier, non-monetary inventions really are needed here. What exactly are we looking at here? Are targeted cash aids enough? Or do we even have room fiscally for that? I mean, for one, you have the administration putting on the table various forms of subsidies here for breadwinners, rent assistance, and even for stay-at-home moms. Do we even have enough space to actually accommodate those aids and subsidies?
I guess these subsidies for the most vulnerable, for the poorest of the poor, that's really to alleviate the effect of higher prices. But in terms of making sure that inflation does not increase substantially, I think the government has done a lot in increasing importation, reducing tariffs of some products, like for example, pork and corn. So they've actually extended this to end of 2022. They've also subsidized agricultural workers because that will feed into your food product. Agricultural workers, maybe fisher folks also, since the prices of fish is also rising. I know I've read some in the news that this administration is actually talking to China with regard to importing more food from them. So diversifying your sources would also help. I guess in the near term, I would think that maybe monitoring of relevant government agencies, for example, the Department of Trade and Industry, in terms of retail prices, if retail stores abide with the SRP, suggested retail price of PPI. Also, maybe preventing possible hoarding, so which usually could happen when prices are increasing. So this will create artificial prices. So I think maybe just continuing these interventions, and maybe in the medium term, do agree with the current thrust of the the government to focus on agricultural productivity and food security, because this will actually help us in future shocks similar to this.
Okay, then give us I know you touched on this earlier already during the interview, but give us an idea here on your outlook here for the peso.
For the peso, we think it's, after that off-cycle rate hike in July, it has actually stabilized a little bit. It has actually gained strength, right? I think yesterday it closed at maybe 55.6. We do think there's some more room for depreciation in the third quarter. Usually, this is just seasonality. Businesses import more in the third quarter when they prepare for the Christmas holidays. So there is that seasonal depreciation of the peso, but it will likely increase a little bit in the fourth quarter when remittances come in.
Okay, and then also, how might this all play in the country's growth momentum? I mean, we're dealing, of course, with hot inflation, high debt levels, and even high borrowing costs. Again, you have the Marcos administration wanting to lower poverty incidence to single digit. How likely is that to happen given all these headwinds?
I guess, for growth, for example, we think there might be a little bit of a slowdown next year, but still robust enough. It's not really going to be a stagflation issue like what I guess advanced economies are thinking, right? The Philippine economy actually banks on a lot on its domestic consumption. So I just looked at the figure, for example, in 2018 when we also had quite high inflation at I think average of 5.2% in 2018. Household consumption was actually still up, around 6% up for household consumption. So even though with high inflation, there might be some room, also still some room for the economy to grow robustly. The problem is usually when elevated inflation lasts for a long time because it eats up a lot on your savings. So hopefully, if inflation comes down by maybe the second half of next year, we won't be as affected as some as more pessimistic analysts say, right? In terms of poverty, we've actually discussed this a little bit in the bank. I think generally the poverty alleviation figures is really target is really a tall order for this administration. If you look at past poverty incidents, it was actually declining very slowly, except for, if I remember, 2015 to 2018 when poverty really declined, largely due to the 4Ps program and also, I guess, the infrastructure, more work, more substantial work for increasing number of jobs. So with the PPP, you had that before.
Okay. Now, lastly, before we let you go, Domini, again, you mentioned earlier GDP figures out by August 9. What's your projection here, not just for the quarter, but at the same time for full year?
We're thinking a little bit higher, still high for the second quarter, maybe around 8.2%. So higher than 8% because really we're coming off from that, I guess, beta wave during last year, right? And then we came off from the Omicron variant surge in January. So there's some revenge spending, some revenge travel that we're seeing. Inflation was not so elevated yet during that time, only towards June, right? So there. For the rest of the year, we're keeping our projection at maybe 7%, at 7% still. Of course, there are some risks depending on where the external environment, how the external environment plays out, how inflation increases.
Okay, let's see how things play out come Monday. Thank you very much for your insights again, Domini Velasquez, Chief Economist over at China Bank.
Thank you so much.
Now let's pause for a quick break, but coming right up after that. We're still in the thick of earnings season and Pldt saw a double-digit increase in its profit in the first half. More of that and other stories when Businessworld Live returns. Stay with us. Are on the rise. Shaila Francisco tells us how the Agriculture Department plans to deal with rising prices in this report.
Some of the meals like sisig and papaitan in this eatery in Makati are now missing a key ingredient, spice. Dine-in customers have noticed that the staff rarely serves chili nowadays. The owner says this is due to the prices of red chili or siling labuyo shooting up to 500 pesos a kilo in some markets.
Ang dami na nagagalit na customer sa amin kasi pag nakabili kami ng half kilo, di ba, is 300 na. So nalalagay lang namin sa papaitan at saka sa sisig na lang. Madalang na lang yung nilalagay namin na sa bicol, ganun. Tsaka kung dati, sabi ko nga sa kuko, kung dating naglalagay ka ng 30 pesos, i-half na lang, mga 15 piraso na lang.
Retailers say prices are usually high this time of the year due to fewer harvests. For now, they are offering bundles at 10 pesos per 7 pieces. But it's not just prices of red chili that have gone up. Onion prices have also increased by more than 100 pesos.
Halos nga po walang nagbebenta nun kasi ang puhunan pa lang niya, masakit na sa mamimili. Kaya pag binenta mo yun, 200, 280. Kaya hindi kami bumibili, nagtitiis na lang sila.
The DA says they are exploring the imposition of suggested retail price in onions as well as possibly importing the vegetable.
So now we are looking into kailan ba yung early harvest. Doon po ang magiging basihan dapat kung gaano karami po ang kailangan iangkat, kung kinakailangan po tayo mag-angkat.
Likewise, sugar prices also continue to soar. To combat this, the Sugar Regulatory Administration is eyeing 300,000 metric tons of sugar imports as local harvest in August and September is not enough to meet the demand. The DA, meanwhile, is asking the SRA to ensure that a significant volume of imports will be allocated to the household market. With the entry of more supply, whether through imports or local harvest, they're expecting prices of white sugar to go down to 72 pesos a kilo. Shaila Francisco, we are One News.
Now a break from those bad news. The Energy Department is projecting a rollback in fuel prices next week. Speaking to Radyo 5's Ted Failon, Oil Management Bureau Director Rino Abad says they are expecting diesel prices to decrease by around 2 pesos per liter. Prices of gasoline are meanwhile expected to go down by over a peso per liter, while per liter kerosene prices could go down by over 2 pesos. China fired ballistic missiles and deployed fighter jets around Taiwan on Thursday, a show of force after U.S. House Speaker Nancy Pelosi's visit to the island. Beijing held its largest ever military exercise around Taiwan, just 20 kilometers from the island's shore. The Taiwanese cabinet said the drills would disrupt 18 international routes passing through its flight information region. Because of this, Taiwan has decided to close its airspace until August 7. Back on the home front, Philippine Airlines and Cebu Pacific said they are now closely monitoring the situation following that airspace closure notice. Meanwhile, political analyst Richard Haydarian believes that the Philippines may be caught in the middle of the growing tensions between the US and China.
Amerika trato sa atin ay treaty ally nila. Now, ano ibig sabihin yan? Ang ibig sabihin niyan, pwede gamitin yung mga base dito sa Pilipinas, whether yung military bases sa Subic and Clark, whether yung mga bases na dyan na sa north ng Philippines, no? Meron tayong mga naval installations dyan sa malapit sa Luzon Strait, no? Na malapit dun sa south ng Taiwan. Lahat yan magagamit yan in the moment of war.
The Trade Department is expecting to sign a free trade agreement with South Korea by November. FTA negotiations between the Philippines and South Korea began in June 2019 and concluded in October last year. Once effective, the agreement is expected to expand trade and generate more investments and jobs. Some of the Philippine products covered by the FTA are banana, pineapple, and other tropical fruit, while South Korean products that will enjoy free trade privileges include vehicles and auto parts. San Miguel's net income has risen to 32.5 billion pesos in the first half of the year, driven by top-line gains across its businesses. That is equivalent to a 24% jump to its consolidated earnings. SMC's consolidated revenue also reached over 711 billion pesos. This is 73% better than the previous year. SMC President and CEO Ramon Ang admits that it has been a very challenging period for the conglomerate amid geopolitical conflicts which resulted in supply and cost issues. Despite this, Ang believes that their performance proves that the country's economic recovery and growth are gaining pace. Now, PLDT earnings saw a double-digit jump in the first half with the telco core income up by 12% to 17 billion pesos. PLDT's reported net income climbed 30% in the first half to over 16 billion pesos. The higher earnings comes on the back of growth in the firm's home broadband segment, boosted by the continuing hybrid model for both work and education. However, the company admits that they continue to face challenges due to inflation as more customers are seeking to save up money on internet connection. For next year, PLDT targets to shut down its 3G network as its frequencies will be used for LTE services. The telco giant expects its wireless service to continue pushing growth over the second half.
The pandemic has affected us, but it has opened up in the second quarter, so that has been a positive for the wireless business, because now people are more mobile.
Home broadband to lead the way, with revenue momentum expected to be at least maintained, if not accelerate, in the second half. A challenging environment with tougher economic conditions, but we hear from the wireless group that it might perform better in the second half.
And those are the biggest stories on the economic and corporate front today. I am Jes Delos Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Jes Delos Santos. Let's now have a quick check of the local bourse after inflation hit 6.4% in July, the highest yet since October 2018. As you can see right here, the index breaching that 6,500 level, continuing gains that we saw on Thursday. The index now up close to 0.5% at 6,512 again on Thursday. We did see investors on bargain hunting mode ahead of that inflation data. Again, that came in at 6.4%. with noticeable increases, of course, in food and non-alcoholic beverages, as well as transportation and household spending. Now, let's shift the focus this time around in the telco space. That's following PLDT's 7.6% earnings growth in the second quarter, bumping up first half net income by as much as 30%. The stock exceeded the benchmark's gains on Thursday following those numbers, but the telco is warning of more headwinds in the second half as elevated inflation is expected to impact customers' purchasing power and the firm's operating costs. That, of course, warrants a quick check here of how our telco stocks are doing so far this morning. As you can see here, gains across four players here, PLDT, Dito, Globe, and Converge. PLDT so far gaining 0.3% here, now at 1,766. Also Dito, look at this, gaining by more than 8%, now at 3 pesos and 82 centavos a piece. Same can be said here of Globe, up close to 8% at 2,080. Converge likewise gaining by as much as 0.8%. Now this time, let's have a quick check here of our leaders and laggards for the main index here. Megaworld so far, the best performer in the trading day here. Megaworld up by 2 6/10%. LT Group likewise gaining 2 2/10%. You also have the likes of BPI here up by 2%. On the downside, however, you have ICTSI losing, shedding as much as 1 1/10%, even as they reported a 50% bump up in their first half net income. Also, we have to take into account here Worldcon also on the losing end by over 8%. Likewise for SM Prime, losing close to 0.7%. And that's it for today, August 5, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News, all sides, all the time.